Welcome to this presentation on risk. This video is brought to you by Alpari. Trading in the off-exchange Forex or the spot Forex market is a great opportunity. It's a lot of fun and there's a lot of things to do, but it does come with some inherent risks that you need to understand and make sure that you know what should I do about those risks. So primarily you can typically divide those risks into basically two categories. The first category is leverage. Now, in this case, oftentimes you'll hear traders talk about leverage or gearing, and essentially what they're referring to is that, as you know, you have in the Forex the ability to move very large amounts of money with a very small amount of margin. So the actual margin that you're posting is much, much smaller than the actual money that you're trading. So leverage may be 100 to 1 in some cases, or greater, or even somewhat smaller. But in either case, you've got this ability. Now, this is an interesting opportunity for traders, but it's something to keep in mind that it works both ways. What this means is that just as a small amount of money on deposit in margin can control a very large amount of money in the market, a very small movement in the market can create a very large difference in your account. So leverage can not only work for you, it can definitely work against you. Now, because this is a leveraged product, Spot Forex is a leveraged product, that means that a small movement in the market may translate into large losses in your account. Those losses may exceed the account balance that you have. So, and you may be responsible for those losses. So this is something to really keep in mind as you begin evaluating the Forex as an opportunity for you. What can I do about those risks? Do I understand what that risk is, and am I willing to accept that risk? Now, there is another category of risk as well that we're very concerned about. The second risk that we're very concerned about is relative to risk reduction strategies like stop losses are a great example. There are conditions in the market that will occur where the market is moving so quickly, or just market conditions and liquidity in general may prevent a stop loss from being executed, which means that if you had a stop loss on one of your positions, you may actually lose more than you had anticipated based on that stop loss amount, just because the order could not be executed at that price. Here's what that basically means. Stop losses are not guaranteed. Be prepared, think about the risk before you enter a position, and make sure that you understand, well, what does this mean for my portfolio? Now, there are a few things that you can do, in fact, two very specific things that you can do to make sure that you understand what you're dealing with when you're working in the Forex and what these risks are that you need to be aware of. The first one, too often neglected, is read your disclosures and make sure that you understand what they're saying. So you're going to be provided with information when you set up your accounts that includes disclosures so that you understand what are the limitations, what are the inherent risks in the Forex, and what are the things that I may be exposed to as a Forex trader. Make sure you read them and that you understand them. The second thing that I always recommend is education. Education, there is no satisfactory substitute for your own education. There isn't anything else that you can do or buy that's going to substitute with the same kind of return as education will. Now, this may mean everything from making sure that you're watching the videos and education available to you from Alpari, to making sure that you're paper trading your strategies and you're thinking about how would I implement this in the live market, getting a little bit of experience. There's no satisfactory substitute for education or experience, and there's really only one way to get it. So it takes a little bit of effort, but well worth the time that required.
This video has been brought to you by